You've heard that you're supposed to invest. You've seen the headlines about stocks hitting all-time highs. But when you think about starting, your mind floods with questions. Isn't it just for rich people? Isn't it basically gambling? Where would you even begin? What if I told you that in the next 10 minutes we will erase that confusion forever? We'll give you a simple, actionable plan that you can use to make your very first investment today, even if you only have $50. Stay tuned. Before we talk about how to invest, we need to understand why. The biggest reason is to fight an invisible enemy that's eating your money every single day. That enemy is called inflation. Think of it like this. Your cash is a melting ice cube. 10 years ago, $10 could buy you a movie ticket and popcorn. Today, it might just cover the ticket. The money didn't change, but its power did. It melted. But inflation isn't the only problem. The second enemy is something called opportunity cost. Every dollar that's sitting in a low-interest savings account isn't just melting. It's also missing out on the opportunity to grow and work for you. Here is a quick secret called the rule of 72. You divide 72 by the interest rate you're earning to see how long it takes for your money to double. If your savings account pays 1% interest, it would take 72 years for your money to double. But if you invest and earn an average historical stock market return of 8%, it would only take 9 years. That's the opportunity you're missing. Investing isn't just about preventing your money from melting. It's about turning that ice cube into a snowball, rolling downhill, and building real, life-changing wealth over time. Okay, so investing is crucial. But what are you actually buying? Let's demystify this. For a beginner, you only need to know about 3 main things. First, we have stocks. Buying a stock means you are buying a tiny piece of a public company. If you buy a share of Amazon, you literally own a tiny fraction of the global retail and web giant. If the company grows, your piece becomes more valuable. Within stocks, you have growth stocks like many tech companies that you hope will grow very quickly, and dividend stocks, often older, more stable companies that pay you a small portion of their profits regularly. Either way, you're betting on the success of a single company, which means it's higher risk but also offers higher potential for growth. Second, we have bonds. Think of a bond as a loan. You are lending money to a government or a big corporation. In return, they promise to pay you back your initial loan on a specific date, plus regular interest payments along the way. They are safer because if a company goes bankrupt, bondholders are first in line to get paid back before stockholders. It's the slow and steady tortoise to the stock market's hare. Now, for the most important one for beginners. Third, we have funds. This is where the magic happens for new investors. Imagine a horse race with 500 horses. Trying to pick the one single winner is incredibly difficult and stressful. But what if you could place a tiny bet on all 500 horses at the same time? A few will do terribly, many will do okay, and a few will be huge winners. But because you bet on everyone, your success doesn't depend on picking one winner. You're just betting on the race itself. That is exactly what an index fund or an ETF is. It's a single investment that holds tiny pieces of hundreds or thousands of different stocks. By buying just one share of a fund that tracks the S&P 500, you are instantly invested in the 500 largest companies in the US. This is called diversification, and it's your #1 tool for dramatically reducing your risk while still capturing the growth of the overall market. This is the part where the rubber meets the road. Here is your simple 3-step action plan to making your first investment. Step 1. Open the right account. You can't buy investments at your normal bank. You need a special account called a brokerage account. Think of it like a shopping cart for the stock market. For beginners, use a well-known, low-cost brokerage. When you sign up, you might see options like individual account or retirement accounts like a Roth IRA. A standard individual account is the perfect place to start. Opening one is free and takes about 10 minutes online. Step 2. Fund your account. You do not need thousands of dollars. Link your bank account and transfer in an amount you're comfortable with, even if it's just $20 or $50. The most important thing is not the amount, but building the habit of putting money to work. Most apps will let you set up automatic transfers, which is a powerful way to be consistent. Step 3. Buy your first investment and beat the fear. Okay, decision time. What do you buy? For 99% of beginners, the answer is a broad market index fund ETF. A popular one that tracks the S&P 500 has the ticker symbol VOO. Another that tracks the entire US stock market is VTI. But wait, a big fear might pop into your head. What if I invest my $100 today and the market crashes tomorrow? This is a valid fear, and it's solved by a simple, powerful strategy called dollar-cost averaging. Instead of trying to time the market, you commit to investing a fixed amount of money at a regular interval. For example, you invest $50 on the first of every single month, no matter what the market is doing. When prices are high, your $50 buys fewer shares. But when prices are low and scary, your $50 becomes a superpower. It buys more shares at a discount. Over time, this averages out your purchase price and removes the emotion and stress from investing. The secret is consistency, not perfect timing. So, search for VU or VTI in your app, decide on your starting amount, and hit the Buy button. And that's it. Congratulations, you are officially an investor. Before we finish, let's talk about one last thing: your mindset. Your investments will go up and they will go down. That is a normal, healthy part of the process. The financial news is designed to make you panic. Your job as a long-term investor is to ignore that noise. You are not a day trader. You are building wealth for your future. Trust the process, stay consistent with your plan, and let time do the heavy lifting. Let's recap. You now know that investing is essential to fight inflation and opportunity cost. You know the basic building blocks are stocks, bonds, and funds. And you have a concrete 3-step plan to open an account, fund it, and buy your first diversified investment using dollar-cost averaging to remove the fear. The journey to financial independence is a marathon, not a sprint. But today, you've taken the most important step. You started. The best time to plant a tree was 20 years ago. The second best time is right now. If this guide helped demystify investing for you, do 2 things for us. First, hit the like button and subscribe to the Wealth Compass. We are a new channel dedicated to giving you the map to build your wealth, one simple step at a time. Second, go down to the comments and let me know. What is the one thing that was holding you back from investing before watching this? I read every single comment. In our next video, we'll dive deep into the best types of accounts to use, like a Roth IRA, to make your investments grow completely tax-free. You don't want to miss it. Welcome to the journey. Let's build your wealth together.